Good evening, real estate bears. I guess that's what my channel's become now. I'm a bear, apparently. That's what I've heard. People are getting mad at me because my content is too negative now. Dude, I've always posted the positive side and the negative side. It just so happens that pretty much all the news right now is negative. But it's funny because when I put a positive video out, all the bears hate me. And when I put a negative video out, all the people who want to be bullish, rag on me for not being positive enough. But anyways, today's video, TD Economist predicts prices to drop in BC real estate states bleak outlook. So BC's housing market is looking bleak following tariff-related uncertainty during the first quarter. 2025 home price forecasts have been cut the most in BC and Ontario, where we now think that prices will decline in annual average terms this year. This reflects muted demand conditions in both markets and supply-demand balances that are heavily skewed in favor of the buyers. Economists at the bank now forecast West Coast home prices will decline 4.1% this year. I think there's a lot of markets, at least sub-markets, that have already declined 4% this year, following 1.7% growth in 2024. Meanwhile, sales growth is expected to decline 0.8% this year, following 2.1% growth in 2024. So if I were to decipher this on basically what this guy thinks is going to happen, is that maybe prices drop a lot in the beginning of the year, but then as we get into the second half of the year, we have, the tariff situation is sorted. That's done. The tariffs are here, but prices are lower and interest rates are lower, and that will cause demand to come back into the market and slow the rate of price declines, or possibly even stabilize the market and cause prices to trade flat in the back half of the year. And maybe in the back half of the year, we have sales that still suck, but they're better than the back half of last year, which was really bad. And at the end of the year, that's how we arrive at only 0.8% sales growth, or decline in sales growth. Now, currently, the fear and greed index was at a 4. That is shitting your pants territory. That is the greed and shit your pants index when you are at a 4 on that thing. I have never seen it that low before. People are absolutely terrified. Result of that, stock market's been tanking basically in a free fall since the beginning of last week for the most part. And the real estate market right now is pretty frozen. So that being said, who is out there buying right now? Because there's still transactions every single day. The first buyer is a first-time home buyer, which I truly believe is a great time to be a first-time home buyer. First-time home buyers like to take their time. They like to see, like most people that buy a home with me, they might go see, I might take them out 3 times, 1 to 3 times they buy the home. First-time home buyers like to see more than that, right? They like to go out 5, 6, 7, 8 times because it's their first time, right? They've never done this before. They don't even know what's out there. They don't know what to look for. This is a great market for them because you're not in a rush to do anything, right? There's tons of inventory. Things are moving a lot slower. You can put subjects in your offer. You can talk to mom and dad about your decision to do blank before you even put in the offer. It's an amazing market to be a first-time home buyer. And that's probably, maybe not that's the majority of new buyers in the market. Like there's no first-time investors in this market for the most part. Hey, if you're a realtor and you're thinking about making a change, my team, the TK Group, is hiring. And if you want to chat with me about what that looks like, you can book a time to chat with me in my calendar below. Obviously, we help you with things like what I'm doing here, YouTube, TikTok, Instagram, leads, and everything in between. So if you're thinking about making that change, reach out to me. I'd love to hop on a call with you. The second buyer is obviously somebody who sold a property and then is buying the next one, right? And that's pretty self-explanatory. And then the third buyer, which I think is interesting, I've had a couple of these calls now, are people who are buying for retirement. So it's interesting that anybody who is investing now, it's no longer like, oh, I want to make money in 2 years and flip this and get out of it and then buy a townhome. Those people are gone. The investors that I'm talking to now are like, I'm just going to buy this 1-bedroom condo, put it in my portfolio, and it'll it'll supplement my retirement, right? Eventually the renter is going to pay off the mortgage. And in 25 years, I will make, probably $4,000 a month, just cash flow that comes into my bank every single month because I own this. And if you actually look at cap rates today, which is basically like the rental income minus like taxes, insurance, and blah, 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 divided by the purchase price, excluding mortgage costs. So if you take out the mortgage, cap rates are some of the highest cap rates that we've seen, probably in the last 30 years right now in Vancouver and the Fraser Valley. So if you're somebody who's very liquid or you have lots of cash, right, it's actually a pretty sweet time to be a buyer because like you buy a condo that like, I think I looked at some cap rates on like a Langley condo the other day and it was like 5%, right? And there's maintenance and other stuff that comes off of that, but 5% isn't that bad. So like if you were to just buy a condo cash, 500 grand that returned 5% every year, I mean, that's more than a GIC. You buy something in the stock market right now, there's so much volatility and worry and problems that come with that. I guess you could buy silver or gold, but again, there's not a lot of certainty there. So people that are retiring, they just want a return. Well, it's actually a pretty decent option to just buy real estate cash right now and rent it out. Yeah, the price might go down, but you're not buying it to make a capital gain. You're buying it for the stable income that it provides, right? And you can go buy a dividend stock, but you don't know if that dividend stock is going to get cut in half. You don't know if they're going to cut the dividend. You don't know if that company's still going to be around. Whereas there's probably a much better likelihood that even if you get a bad tenant, you have to evict them. Well, the next guy is probably going to pay, right? Like your odds of receiving that income every single month are probably better than say buying a Nike stock that just got tariffed and absolutely slammed through the mud. Who knows how well Nike's going to recover from this, right? So like if you're, an investor that has a long-term mindset who's buying for retirement, not buying for a capital gain, not buying to increase their net worth, but buying to supplement retirement, it's actually a pretty good market to do that right now. But yeah, we are terrified. Literally, we are terrified. Tarrifed. TARRIFFED. I don't know, man. We're terrified right now. We are scared. Fear and greed index is at 4. Sentiment is terrible. It is frozen out there right now in the market. But as I said in my last video, I think something will cause this to change in the next probably 3 to 5 months. Something big will happen that will kind of unstick the market, whether that's prices coming down or interest rates coming down. I think something will happen, but I am just guessing. And if you enjoyed this video, please subscribe to the channel, like the video. If you want to chat with me about buying or selling in the Fraser Valley, book a time to chat with me using the link below. I'm that Agent Kelly. I'm making moves to move you.